Hello, friends. Following my market update on US equities, it seems like there is some optimism back in the market after the latest PPI data that has been released. While the PPI data isn't that low to warrant such optimism, we should not be surprised to see how market perceive and interpret the data. Something to note is that the US 10-year Treasury yield is now down from over 2.8% to around 2.66%. It's a positive sign. And it seems like the market narrative now is that inflation has peaked. This is further supported by a Federal Reserve governor who said he believed that inflation had pretty much peaked. But who can say for sure about this, though I'm watching to see if Nasdaq 100 can hold above 14,250 points by end of this week. And one key takeaway from this week corporate results pertain to JP Morgan's 1Q 2022 results. The day chart of JP Morgan after the earnings result isn't that pretty. As we can see, a 3% fall in share price. The latest set of 1Q 2022 results show a 6 billion fall or around 42% fall in net income for 1Q 2022 as compared to a year ago. Isn't that optimistic? A significant fall in net income is attributable to the increase in allowance of almost 4.8 billion USD, which demonstrates the worries that senior management of JP Morgan had on its consumer and community banking division. Indeed, Jamie Dimon, CEO of JP Morgan, expressed that there is so much uncertainty in the market that it is near impossible to predict the economy ahead. Worries over Russia-Ukraine war, inflation, commodities prices are all these clouding management assumptions in the businesses. 1Q 2022 also sees its corporate and investment division suffering lower activities and coupled with higher expense that leads to another 1.5 billion USD drop as compared to 1Q 2021 results. Given the size of JP Morgan business, it signaled that the brick and mortar businesses may face certain uncertainty for their respective businesses in the whole US economy. It did also give some heads out on how banking companies like Goldman Sachs, Bank of America, and Wells Fargo may perform. Nevertheless, these companies' share prices have so far seemed relatively resilient despite JP Morgan's relatively weak result for 1Q. All in all, my thoughts are that markets are getting slightly less aggressive in assuming an extremely hawkish Federal Reserve as can be seen in the US Treasuries. With market walking on a tightrope right now, any slight changes in market conditions can lead to much higher volatility. And I'm not surprised that market can go up and down relatively fast. At this stage, it pays to be cautiously optimistic but yet selective on the stocks to own. Given that I am an individual investor, I have the option to keep cash on the sideline. And I will definitely employ this and keeping a certain portion of the cash on the sideline to manage my risk. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. As always, this should not be construed as any investment or trading advice. Thank you.